Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, thanks to all my subscribers. I have over 1,000 subscribers, actually 1,600, over 1,600 subscribers now. Check this out. You need at least 1,000 subscribers to become monetized. That's one of the thresholds. The other is have to have over 4,000 watch hours. I'm literally like roughly 200 watch hours away. So guys, thank you so much. A lot of hard work goes into this channel. I've been doing this for about close to 6 months now. So a lot of research into my videos, a lot of editing and replying to your comments. I try to reply to every one of your comments. So if you leave a comment, I'm gonna really try to get to your comments and give a response. So thank you to all my subscribers. Thank you to everyone that comments and gives a thumbs up. Really helps out the channel. Appreciate it. Humbles me that you guys watch my video and find value in my content. So if any of you guys want to start a YouTube channel, I definitely say go for it. Go for what you love to do. Go for what you like to do. It really does pay off, but it is a lot of hard work. A lot of hours go into this. But if you want to do it, definitely go for it. It will pay off in the end. All right, guys, let's get started with today's video. So I think a lot of new subscribers have come to me when I started talking about SPAC stocks. The first one I really talked about was SHLL, Shell Tortoise Acquisition, which is going to bring Hyliion to IPO. So I figured I'd see a lot of comments of people saying, how can I get into SPAC stocks before they go up to 14, 15, $20? How can I get in at the bottom? So the SPAC stocks, they basically trade at $10. Before there's an announcement, before there's an acquisition, they all will trade at roughly $10 range. So that's just what they trade at. That's what the deal is when they go public. They trade at $10. So if you could get into these stocks at $10, imagine getting to Nikola when it was only $10, and then I think it shot up to the highest. It was like $90 or $80. Imagine if you got in at $10. DraftKings. Imagine if you were getting in at $10 and just held all through the merger, everything. Another one is Virgin Galactic. Imagine if you just got in at $10. I think that thing shot up to $90, maybe $100. I don't remember, but imagine if you could get in at the rock bottom. Definitely, you'll make a lot of gains. So I'm going to share with you what I do to get in at the lowest price. So what I'm doing is not foolproof. It's not guaranteed. I'm not a financial advisor. So don't take what I say as gospel or anything. But just look into it, see if it makes sense to you. Do a little bit more research, and at least I put you on the trail. So I'm going to show you my screen and basically just explain to you what's going on. But to cut to the chase, basically it is setting a stop limit order. So a lot of people do stop loss orders or stop limit orders for selling a stock. Like if you have a stock and it's gone up like 100%, you want to protect your gains, and so you put a stop loss or stop limit on that stock. And so if it drops 10%, 15%, whatever it is, your broker will automatically sell that stock for you, so you don't take all the loss, and you could protect your gains. So that's what mainly most people do for stop loss and stop limit. But you could also do that to buy a stock. So a lot of people don't really realize that you could do stop limits to buy a stock. And so I'm gonna basically walk you through it on screen here. So check it out. So here's basically your order screen from Fidelity, which is my broker. So this screen is going to show you basically my example is IPOC. If you don't know what IPOC is, it's Social Capital Philosophia, and this is the person that owns it, Chamath. He is the person that brought Virgin Galactic to IPO with his first SPAC company. So he has two more SPAC companies, and so they are, a lot of people are talking about them. It's IPOC and IPOB. So that's your homework. Look into IPOC, IPOB, and you'll notice that it's not trading at $10 range, like I said. Well, because it is Chamath's company and he has a premium. People are going to pay more just because he's well known. He's on TV a lot, and he has already one successful SPAC company that brought Virgin Galactic to IPO. So he has a good successful track record. So you're going to pay a premium for his company, and so that's why here it is. It's trading for roughly $11.13 again with that premium. And so here's an order. So this is a buy order in this example. So buy order for 10 stocks, and it's a stop limit. And so what that means is you get to set two prices. Basically, what it is a low price and a high price. So what this is telling your broker is that you want 10 shares of this stock if the price is between $12 and $13.50. And so why did I set $12 and $13.50? So a SPAC, like I said, SPACs, they roughly trade around $10. This one is trading around $11, again, because it's Chamath's company. So I don't want to buy a SPAC company if there's no news, if there's no merger. There's no point in buying them at $10 because they're just going to trade at $10, and there's no gain in there. So I want to get in when there's some news, when they have a target that they're going to get an acquisition and bring that company to IPO. That's when I want to get in. So that's why I set it just a little bit over what it normally trades at. So for this example, I set it at $12 because most likely the only way that this stock is going to hit $12 is if there's some news. If they come out and say we're going to acquire this company, then that's when the stock is going to go up. And so that's the only time I'm interested in getting into this stock. So if I set it at $12 and it hits $12, it's most likely because some news came out. Again, that's not guaranteed. It could hit $12 just for no reason, but most likely it's probably because news has come out. Now, why do I set $13.50 at the high end? Well, I don't want to get into the SPAC if it's already shot up, if it's already gone up to $15, $20, because that's already too high. I don't want to buy at the high. I want to buy at the low. So that's why my limit on the high end is $13.50. So if I can't get in at least $13.50, then it's already ran up too high for me. And then probably I'll just wait it out. If it goes up to $20, $25, most likely it'll come back down, probably down to $13, $14. So that's when I'll reevaluate the situation if I want to get in. But to get in at the bottom, $10, $11, $12, that's very low risk because these SPAC companies, again, they just trade at the $10, $11 range. So if something happens, if they try to acquire somebody, the deal breaks, the deal doesn't happen, it's just going to fall back down to $10, $11 range. So if you buy at the bottom, you're not going to lose any money. And if they never acquire a company, again, you're not going to lose any money because this money goes into a trust. So if the company is not able to make an acquisition, then that money just gets returned to you. So that's why it's really beneficial to get in at the lower price point. It's a lot high level of protection and relatively low risk. So guys, if you find any value in my video, consider subscribing, give me a thumbs up. It really helps out the channel. Take a look into IPOC and IPOB, Chamath's two companies. Something you might want to consider putting a stop limit order on to get in at the bottom. All right, guys, thank you for watching. Catch you in the next one. Peace.